Today is the end of June, so I want to do my monthly portfolio recap. Today we're looking at my Roth IRA and Robinhood. You can see that the current value has come up to about 13,900. Seems about we're $2 short of that, so we'll just round it up. Now let's look in the last month. We've had a 4.91% increase in portfolio value, which has come out to about $651 worth of profit. This month has just been simply incredible. I know a lot of that came from Nvidia just continuing to rally, which I'll have some thoughts on that later. But we did see major stocks like Apple as well take off after their presentation about their future AI implementation, which I will talk about a little bit too. I thought was quite interesting. So between the two of those, we can see a lot of gains come out. So yeah, let's look at some of our actual allocations we have. We have 44.89 shares of QQM, which let's turn that to equity. We can see it comes out to $8,869.92. Now we can look at our SPY, which is much more expensive per share. We only have 2.06 shares. However, that comes out to $1,122.14. And then we have VOO, some people call us VOO. We have 7.76 shares, which comes out to $3,890.49. Now, this is kind of my idea when it comes to my mutual funds. I don't really invest in individual stocks. I have when I started off, and I did decently well, but I just don't have the time to evaluate, quite frankly. And with the amount of money I'm working with, it's not quite worth the time that's going to take to write up a paper justifying my purchase. So, in light of that, we've kind of gone more heavily towards the NASDAQ 100 compared to just being an S&P 500, which a lot of people do recommend. And I also recommend to a lot of my friends that are starting off investing, just go with the S&P 500 because it's very basic. The only reason I do something like QQQM is because although it is more volatile, I'm more bullish on like the future of tech stocks, and it is very correlated with the S&P 500. It has a beta of 1.2. So if we could see something like 11-12% annual returns with dividends reinvested, I think that's pretty nice. And considering I'm only 21, if I was going to retire around 60, that's a lot of growth from now until then. So we're going with QQQM. I don't know, maybe next year I'll change my idea on that. But so far, I've had that for about a year and a half, 2 years, and it has treated me quite well. I cannot complain. It was QQQ before, but we switched over to a lower trading volume, less expense ratio fund because I'm not necessarily a day trader by any means. And then, yeah, we still have S&P 500 exposure, and I do that because as much as I like to say I have a high risk tolerance, no one likes to see their portfolio drop 2% a day because tech stocks love to be volatile, especially when some earnings reports come out and people just don't necessarily like them. I don't like to see several $100s disappear in one day, although I still do see that. It's just not as bad with the S&P exposure. And at the same time, sometimes the S&P does better than the NASDAQ in a day. Actually, often we can see a nice mix of returns throughout the weeks. It does feel nice to see that I just don't get absolutely hammered by a QQQ loss or, tech stocks is doing bad in general. So it kind of keeps me between. I think S&P is just not as volatile as I am willing to take on. And QQQ is just a little too much. So it puts me in between and leaves me at a nice place. We can look at our contributions, which this isn't accurate since we did transfer into Robinhood about 2 months ago now, but we will get into my actual contributions later. But we can see that in Robinhood so far, we put in $460 here, and we've got an IRA match of $13.79, which is love to see that. And we have some recurring investments. We have $25 going to QQQM every single week, $13 into VOO, and $4 into SPY. SPY is a little more expensive, so I don't have too much. I might just make that all VOO eventually, but I did want to kind of put SPY in my portfolio, so it kind of forces me to look at it a little more critically. And now we do have a little bit of a history here, and the only reason I come down to this part is that it is the second quarter of the year, which means we have some dividends that we're expected to receive. We can see here we got $14.29 from, this is QQQM here. And that's automatically going to get reinvested into the same stock ticker. That's what I chose to do here. Big reason I went over to Robinhood because I like to be able to do something like that. And then we have VOO here, VOO, for $13.84. And SPY, the Spider S&P 500 ETF, $3.61. Now we can see the QQQM is coming up. I think, yeah, the date actually passed, so tomorrow it should be trading. VOO is coming up sooner this week. I believe that's either Tuesday or Wednesday. And then SPY is going to be at the end of next month, which I don't necessarily like to see. I mean, less time for that money to be invested, but it's not the end of the world. It's just a month, and it's one of my smaller holdings comparatively, so I don't mind too much. But it is very nice to see dividends come in. I'm not a dividend investor by any means. I don't necessarily believe in that ideology when you're younger. I mean, when you're older, if you need steady cash flow, it makes sense. But right now at this age, I think people should be more concerned about growth, and you still do receive dividends. And once you do get a pretty good amount in your portfolio, I mean, this feels nice. When I started, I was getting like $5 a quarter, so this is about 31 for the quarter. I really love to see that. Makes you feel a little better about yourself. Feels like a little bit of a payday, even though I can't take that money out of the account. And it doesn't go towards your contributions. It's just strictly gains. So, I mean, great mix of everything. Love to see that. But when it comes to my portfolio, seems like we actually did just go over that 900. We're in after hours right now, or pre-market. So, yeah, I mean, that's about it for the month. There wasn't anything too crazy. We could talk about a little bit Apple. The reason I liked their report so much is they had that Siri new update coming out, and although it's nothing too crazy, the idea is that it's going to bring new people in to buy new iPhones, because I believe their AI chip will be in iPhone 15 models and later, maybe the 16 and later. So that will force people to come buying the new iPhones, which their sale has kind of actually reduced recently, and they're struggling to keep market share. So hopefully that definitely helps. And the market's response to that, I think, was actually quite appropriate, considering that was one of the main issues with Apple. We can probably go back in the month and see where that report happened. Yeah, it seemed like on June 10th. And ironically, I think the stock dipped like 1% or 2% from that first point to the next one. But then the next day, it jumped up just, I don't know, 15% or so. It was just ridiculous. But we did love to see that. A ticker I was interested in was Nike. I don't really buy stocks, but I do know the business model of Nike pretty well. And I saw they posted a pretty grim report for the upcoming year as far as their revenue and profit. So yeah, they're having some major headwinds there. But I mean, if you look at the stock in general, it is down. I think it's like 60% from all-time highs. So it's been beating quite a bush. But this drop, I really don't think was justified. I mean, seeing maybe 5% decrease in revenue for the next year is quite significant. Don't get me wrong, but minus 20% in the stock price, I don't know. So it's something I'm keeping my eye on, although I don't invest in individual stocks necessarily. If there is a great buying opportunity, and it'll give me some practice to actually start evaluating. But I mean, we're at $75 down from $177. That's over half the value. I think it's like 60%, so that's crazy. And then I did want to look at Nvidia. I mean, everyone's talking about the stock, of course. But, I mean, yeah, that 5-year chart is just insane. Let's look more towards the quarter chart. So we did have a major pullback about here. And everyone was kind of freaking out, just going crazy about it. But then it did actually come back up slightly the day after. So the past 3 months is still up 37%. But in the last month, 10%. The last week, it was down 2%. So that's a little interesting. We can kind of see some of that like AI craze starting to pull back. And I think Nvidia is a great business, has a great pipeline, and they bottleneck a lot of these companies out there because they're kind of like, monopolizing the AI market right now, which is great to see for their business model. However, a lot of their revenue comes from big companies like Microsoft and Apple and probably like S&P Global. A lot of those companies are buying AI chips from them to spark their own innovation. So once that dries up, what's Nvidia revenue going to see? I mean, it's not going to see the same growth. Definitely not. However, will it stay stagnant? Are they going to find ways to just kind of continually get that AI chip going out into the general public? We'll see. But I do worry about Nvidia in general. I mean, I've seen friends that have made quite a lot of money off of it, and that's great for them, but I don't individually buy it. However, I cannot escape it from my funds. So we'll get a little bit into that. However, I did want to go into this chart I created through Excel. Google Sheets. Oh, yeah, not as good, I know. But I did want to look over it because since I transferred my Robinhood portfolio over, it doesn't track all that prior history, but I did keep diligent notes throughout my investing time, so I can still see how this has looked. So these red dots we go throughout are contribution amounts. Kind of gives the idea of where my portfolio value landed compared to my contributions over time. This top line, the blue one, is the portfolio balance month by month. Ever since I started way back in 2021 when I turned 18 to now, and we're looking at July 2024. So, I mean, that's a crazy amount of time I've been in the market, and it's gone by really fast. But we started the count at only $2,200, and that has just, I mean, continually raised over time. We had a long span here, which we just weren't putting in money, off the ball game. But then I started taking it seriously, got some tax returns, of course, got to put in. But then, I mean, especially in like the most recent year, I've been putting a lot of money into it. I've been continually raising my weekly recurring investments. However, we saw just a crazy amount of gain starting like this time, late 2023. I mean, everyone saw that in the second half of 2023, just stocks were going crazy bullish. And the beginning of 2024 has been the same, which, I mean, a lot of people like. I'm slightly concerned about because it's been just growing a lot. And I think quite a bit of companies are overvalued, especially when they just throw AI in the name. So, yeah, I don't know. Something that's a little unsettling for me, but I'm going to continue buying regardless. I have my set weekly amounts. Later this summer, I'll probably just put in an extra 1,000 or something into the account. We'll see where the bank's at and what allows, but yeah, we'll keep working on the account and keep seeing go up. Hopefully hit that 15,000 goal. That's going to be a really good feeling when I hit it. But then, you know, of course, call it 30% market drawback, bring us about down to lower 10,000. So we'll see. But then, yeah, I wanted to talk about this report from Goldman Sachs regarding concentration. Yeah, let's just look. It's been getting just simply too high for a lot of these stocks being valued. I mean, it's just crazy. A lot of like the majority of profit that you're going to be seeing on your index funds are just coming from the top stocks. And we can see that. I got the SPY allocation here. Yeah, I mean, let's see. Microsoft holds 7.31% of SPY. SPY is the S&P 500 index that I do hold, but VOO will see very similar and all the other S&P ones. But let's see. Apple 6.7%, Nvidia 6.63%. Amazon is 3.94, and then after this point, I actually don't mind it. It seems to drop off quite a bit. But one of the top three companies in this fund hold, let's see, 20.6%. So the top three companies in this are, you know, over a fifth of the concentration. That's slightly concerning, and I think this wasn't as much of an issue before Nvidia rose up. I mean, Nvidia's now vying for that top spot. It did briefly touch it with Apple and Microsoft, but before that, I mean, we had a pretty steep drop with the top three. We're only, let's see, like 16-17% of it, and now it's just over 20%, so it's getting slightly concerning. And the reason I say that is when Nvidia has a tough day, you can see it in like just the general stock market, which we don't like to see. You like to think stocks are, you know, correlated with the market, not the market's correlated with stocks. So yeah, a little unsettling, but nonetheless, we're kind of in for the ride. We don't really have a choice of what stocks are in this fund. We kind of just roll with it. And yeah, I mean, next month, we'll see where we're at. Could be even better. We could hit that 14,000 mark, which we briefly did hit, or we could be below 13,000 and even lower. So, I mean, I never get my hopes up for it. It'll be definitely interesting to see, but nonetheless, I'll be here as I have been every single month posting about it. So let me know if you guys have any questions in the comment or want to talk about anything. I greatly appreciate you watching. Make sure to comment, like, subscribe to the video so that I can feel a little more motivated to keep getting these out and maybe do a higher production value on it. So thank you everyone for tuning in, and take care.